Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Wednesday Hump Day edition, as I titled it for today, the Whiplash Wednesday edition. Man, how quickly things changed. Yesterday, it looked like, actually, Monday, it looked like, man, we were having this nice about face, markets rallying. Sentiment went into the Tuesday session with a slight gain, and all of a sudden, come screaming back down, erasing most of the gains for the week in just one trading session. So that's why I titled today Whiplash Wednesday, where it feels like, everything was going great, and then just about face. And what was surprising today, at least for me anyway, was when we look at that the data that came out. For all intents and purposes, things are pretty good. So let me start there before I get into the talk track I had for today. I'm going to start with the durable goods orders, which were at 3.2%. Now, as you notice on this chart here, durable goods orders are always erratic. They're always just kind of bouncing above and below zero. Obviously, we want things to be above zero. That's the good place to be for the United States, more durable goods orders. And the previous number was 3.2%, and we had an expectation of coming out at negative 1.1. So markets are really expecting a serious decline, which is probably driven by a lot of the tariff talk and just global trade issues. Well, we actually came out at 0.9%, which should have had these markets somewhat rejoicing because that's obviously fairly good news. We're still showing an increase in durable goods orders versus an expected contraction. So that really was the piece pre-market that I thought would be a catalyst for an upside move and move these markets higher. Of course, later on in the day, we did have our crude oil inventories, which, I'm under the impression, wrongfully, of course, it seems like definitely wrongfully, that we're going to see more and more supply, meaning inventories start to creep up here as we start to drill more and more. And maybe I need to give it time for these regulatory obstacles to be removed and more drilling start, but over time you should see this crude oil inventory surge. Today, not only did we not come out with an increase in inventories, we actually saw a decline of 3.3 million barrels in inventories. Now, you guys know my stance on this one. I think that whomever is doing the reporting for crude oil inventories is either completely blind. Like, I wonder if Stevie Wonder is out there doing the inventory control by a visual inspection, because they're always so colossally off with regards to how many barrels. And, we all know how big a barrel of oil is. Well, this was off by 4.8 million barrels. Now, I don't have a calculator here, but I'm pretty sure I could fit 4.8 million barrels inside of Dallas Cowboys Stadium. And I probably need to leave the roof open for all the excess barrels to pop out the top of that building and go probably another 30, 40, 50 feet high. That is just insane to be off by that much on that number. Anyway, I thought both of these actually would have been a catalyst, especially the durable goods orders for today's markets. So I will dive right into that before I get into the longer-winded macroeconomic stuff. I'm going to start at the bottom. NASDAQ, you were down 1.98%. So it was down over 2% at one point. What was the big culprits? Well, since we got a 2% slide, we'll go look at the usual suspects here, the Magnificent Seven. NVIDIA down 5.74%. I did sell puts on NVIDIA today, expiring next Friday. Not this one, but next Friday. I sold the 108s. I'm getting off the top of my head. I sold the 108 strike price, collecting $1.60. So a little over 1.2, 1.3% rate of return for a week. Not the best, but I still am okay owning NVIDIA. I'll bring it up here for you guys. Opening NVIDIA down there at that 108 level. And I have this range bound part on the screen. You can see that 108 level, I had the 112 strikes last week. Let me put on the 108s here just so you guys can see where that is. We've been talking about this for the last couple weeks because I've been selling the 108s and 112s. That red line is the 108 strike, which will put it right in the bottom end of that range there. I'm okay owning that one for 108 on NVIDIA. Again, I wanted to go this week. I was looking at the 108s expiring Friday, but at the time that I made this trade, it was only paying like 45 or 50 cents worth of premium. 0.5% for the next 3 days, that's just not good enough, right? I got to be greedy. So I went out to the 108s expiring on the next Friday, and collected 160. Hopefully that one will work out better than the SMCI that I'm currently in. That one was a pretty aggressive sell-off today, but not worried about that one. Not worried about that at all. Your next big loser was Tesla, coming back down 5.58%. So far, the Magnificent Seven has 2 of those 7 just clearly eclipsing the market losses here and going much further, over double the loss of the NASDAQ today. Now, as far as Tesla goes, there was some data coming out of Europe regarding their sales last quarter, and I didn't get all those numbers, but it looked pretty ugly. And I'm seeing so much backlash over there against Tesla and bulletin boards saying that he's the devil and he's a Nazi and don't buy Teslas. And I don't know whether that's just the algorithm from my data feed that's coming through with all this hate for Tesla in Europe, but it seems like there is a bit of that and they may continue to hurt sales. So maybe I will get my day in the sun. As you guys that follow the show know, I've been wanting to buy Tesla just at lower levels because I do think, as I've stated repeatedly over the past couple weeks, that I think that this Tesla hate is going to continue to push down these numbers, but ultimately give me a screaming buy opportunity. And I just don't know exactly what price level. If we look out here, I have this really lower gap that was almost filled. I wouldn't say it completely filled, but that's down at 214. Right now in the after-hour session, we're at 269. I'm okay taking a stab at this one at 214. Ideally, I'd like to get that 180, which I think is Steve was mentioning the 180 a couple weeks ago, and that would put us way down here. Let me get that cursor. I know I've got multiple blue lines. I'll probably color code these to make it easier for you guys. But let's make that one red at the 180 mark. That certainly would be a much better buy point for me. From the long haul, I'd love to get it down around that 180 mark. But we will see how it all transpires at this point here. I did think we were going to see a rally up today, or at least the remainder of the week, and get near that 300 mark just because the momentum was there. And all of a sudden, erased that momentum. Crazy how quickly that changed today. It was really kind of shocking. Jimmy T says, cheers from Kirkwood. Way to change the story, Jimmy. Let me throw you guys a little curveball. Back in 1991, was it 90? It was actually 1990. I worked at Kirkwood Ski Resort. That was back in the early days of snowboarding, and yeah, I was actually picked up by Avalanche and sponsored for a very short window of time. It was pretty funny. But anyway, I worked at the ski resort for a full year, and that was the year that was one of the worst snow years that Kirkwood had ever had. And the next year, after when I decided I'm not going to work there, they had the bumper year, and it was like one of the best snow years we've ever had. So congrats. Hope you have a great day up there at Kirkwood today. Love that mountain, especially those natural crevasses they have, little ravines to go snowboarding and jumping. Oh, such a great place. Anyway, sorry. Just sharing a little bit of life story with y'all. All right, so that was your 2 out of 7. Both really ugly, down 5.58%. And again, I want to dive deeper myself into looking at what the sales numbers were for Europe, but really a lot of it looking ugly from a sales number in Europe, and we'll see here in a couple weeks how the numbers turn out for Tesla for the United States. Moving on to Google, which is down 3.2%, and it was one of the uglier candles today as well. I mean, just basically opening near the highs, closing near the dead lows. This is not a good sight for Google, which has been on a pretty ugly downtrend here for a while. No, Kirkwood is in South Lake Tahoe. South Lake Tahoe, which actually, it's one of those resorts, guys. If you ever go to Lake Tahoe, you've got Kirkwood's right there. Kirkwood. Heavenly's right there at the South Lake. And that's great, but I don't know. It's a beautiful spot, and it's so great because you can get in and out of that the city right downtown. You can take a tram from downtown, right from the main street, and go straight to the top of the mountain. Very cool at Heavenly. However, I don't know. It's less than an ideal resort for me, especially for snowboarders. So, yeah, I would definitely go to South Lake Tahoe. You go down just outside of town a little bit, probably about a 20-minute drive, but it's just a beautiful, beautiful hill. It's got great terrain, really good skiing as opposed to, basic bunny slopes and wide open tree cut paths. I like Kirkwood a lot better. So we had Google, then we had Meta down 2.4%. We already talked about Meta kind of bouncing off that 580 last week, and it did. Now let's see if we get back to a retest here of that 580 level. For me being a technical person, I'm kind of scratching my head because these moves are, in fact, whiplash. I mean, I do today feel like I should be wearing this neck brace because of these crazy moves up and then all of a sudden gave everything back in just one day. This tells me, based off this, that maybe we are going to see those tariffs on April 2nd. And this is going to be a big part for you and I as traders is probably best, at least from my perspective. This is how I'm going to approach it for myself. You guys do what you want, but I'm probably going to lighten up a little bit going over the next week or so, just until I get the actual definitive Trump making a statement on what the tariffs are. The speculation day to day that, we're going to have tariffs, we're going to cut back on the tariffs, we're full force tariffs, we're going to cut back. Man, what a nightmare as a trader. So I'm going to scale back here just a little bit. And I will be keeping eyes on these levels. As Margaret says here, if we break the new lows, we are in big trouble. I would agree. I would definitely agree with that. That if we break these lows that we've established here recently, especially things like Meta, feels like it's been holding that 580 mark going all the way back into December of last year. If that breaks, some would argue that this is going to be a head and shoulders pattern, right? You can see the left shoulder here in December of last year, the head which peaked in February, and now we're forming the right shoulder. It could be setting up for something much worse. Now, out of the Magnificent Seven, I've got 3 left. Amazon was down 2.2%. Also, similar situation where that little recent swing low that we established here in March, to me, that's critical. Same thing for Microsoft, right? We've all bounced here a little bit, and it's one of those things that I don't have the answer to is this rally, this most recent 2-week rally, going to turn the markets to the upside, or is this just a simple bounce and we get that trend back down to the south side? Dollars to donuts, I would put it to, we're going to see more of a trend to the downside here. And best performer for our Magnificent Seven was Apple. Also, that same precarious situation. Today you have a bearish Harami formation on Apple, which is generally a bearish candlestick formation, albeit everything was bearish out. Almost everything was bearish out there today. Now let's go back up to our broad market indexes here and move up. That was the NASDAQ, which we've just been discussing, and broke down the Magnificent Seven. There is those lows going back to March 11th. Again, I do it if we do get what happened. Let me phrase this. If what I expect to happen happens, we'll probably come back down to these lows. My guess is you have another little bounce, all right, as the market tries to save it. And then if we close below those lows, then I agree with Margaret. I think we got some pain ahead. S&P 500, similar situation. I'm going to keep these lines on the chart here. That 5,509 is the important number for me on that S&P future right now. We're certainly well above that. We're only down 67 points today. It's 1.15%. 5,749 was your closing number, or the number we're at right now. So we've got quite a ways to go before we get down to that level, 250 points to be precise, which is 5% move. That said, there is that potential. I do think we have some weakness coming in the market, and it goes back to that uncertainty. It just felt like yesterday or on Monday that a lot of that uncertainty had dissipated because of the tariff talk. Maybe not. All right, no problem, Liz. It's just good to see you here. Always good to see you here. Whenever you can make it, we appreciate it. Russell 2000 was at 1.04%, which rounds out your broad market indexes. So we talked about the risk on event on Monday, right, where everyone's just buying into risk. Well, today it was a dump risk moment, and Bitcoin falls into that category of risk apparently because it was down 1.35%. However, I like the picture better. Notice when we look at those other market indexes, just take a snapshot mentally of this chart here, and notice we've got those two ascending lines kind of channeling current price. I'm going to extend this a little bit, and these aren't running through any specific points. It's just to give you a general idea of the trend does feel like it's channeling to the upside here. Now, if you look at the NASDAQ, you still have a similar situation here with the NASDAQ. S&P is similar as well, but I think it's a little overextended, whereas Bitcoin seems to be a little bit more stable, controlled up move here, not as sharp of an ascent. So I do like Bitcoin here to the upside, even though we're down 1.35% on the day. And on that note, did you guys hear what happened with GameStop? Everybody hear about that one? Dun, 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 dun. So here is a dying company. All right, we're digressing again. The way my show works, folks, there is no match. This is probably why I could never do like a Fox, a CNBC, and Bloomberg, because I'm sure that the editors, the switchers, the video production teams are like, where the heck is Merlin going with this show today? He's all over the place again. Jeez Louise. Yeah, BTC helped GameStop today. So here's a chart of GameStop. Now, you know my take on it. This thing is dead as the dodo. No one's buying physical games anymore. It's all downloaded, unless my initial thought was they should turn their centers into gaming rooms where you just basically set up a little auditorium for people to game. You hold tournaments that are all hosted by GameStop. You bring in sponsorship. And now I think you start to sell more games. You get people in there and spend money. What MicroStrategy announced, or MicroStrategy, pun intended, what GameStop announced yesterday on their earnings, obviously bad earnings, but okay earnings. They announced that they're going to start to buy Bitcoin. Now, GameStop has roughly $5 billion in cash. We can go out here and look at the numbers, but the numbers they were disclosing were roughly $5 billion in cash. Now, that's not to say that they're going to just take that $5 billion and go all in on Bitcoin, but they said they're going to buy Bitcoin and start adding it to their balance sheet. Very interesting, a la MicroStrategy. So this has a lot of those GameStop speculators, Roaring Kitty and many others, jumping for joy because now they can take this several $billion worth of capital, and I'll show you exactly how much they have here. We'll go to statistics. I'll bring up that cash number here. Let's go to their balance sheet. Total cash, $4.77 billion. What money does GameStop have to buy Bitcoin with? They have $4.77 billion in cash. Now, that was I can't remember exactly how they got it. Part of it was selling off of some assets. They got some funding. They got some backing as well. So, all in all, they got $4.77 billion. Now, the crazy thing for them to do would be to take that full 4.77 and go all in to YOLO into Bitcoin right now. I don't think they're going to do that. But it does create another buyer in the marketplace. And MicroStrategy as well is applauding this, obviously, because that means that you get another buyer for, even if they do 25% of it, it'd be like $1.2 billion worth of Bitcoin being bought. My guess is they'll probably put most of this into Bitcoin and try to do the same thing that MicroStrategy is doing and get that kind of delta where you're taking cash that's just sitting there doing nothing and getting Bitcoin's 130, 140% rate of return annually. That's going to be a win-win. Now, is this the piece that saves GameStop? I don't know. I don't think it is, right? MicroStrategy changed their model. They changed their name from MicroStrategy to Strategy because they're not really doing much with the software side of things anymore. They're really a Bitcoin treasury. And do we see competition in that space? Are there other companies that will become Bitcoin treasuries like MicroStrategy, right? GameStop certainly has some capital here, and they could be a smaller player. So very interesting to see that announcement today, but it didn't have any impact really on Bitcoin. Bitcoin actually went the opposite direction, went down. And I mentioned this before. No one can really give me the answer, but given my experience in the financial markets and the way that your brokerage firms work and the way that your banks work, because banks can now custody cryptocurrency and brokerage firms are, going to be open to crypto soon, I do think that the reason we're not seeing these markets move, again, goes back to fractional reserve banking. When you deposit your money, that money gets lent out. When that person deposits that money again in the bank now looks like they've got double the amount of cash on hand, right? So if I take out $30,000 to buy myself a new car and I go buy that car, let me take it back. If I deposit 30 grand in the bank account, the bank takes that 30,000, pays me almost no interest, but on their books they have $30,000. Now I take that the bank takes that $30,000, loans it to Big Eb. Big Eb now is on the hook for that $30,000, but he goes and he buys a brand new, Chevy F1 or Ford F-150 for 30 grand on the dot. The dealer takes that $30,000, deposits in the bank. The bank now on record has $60,000 in cash on hand. It's the same 30 though. It just moved from one person to the other, but the bank is now doubly rich. That's what I think is happening with Bitcoin, where let's say Coinbase has 5,000 Bitcoin on hand, and then Michael Saylor says, I want to buy 5,000. They simply go, okay, you now have 5,000, but they don't actually buy on the open market the Bitcoin. If this does continue to escalate like this, escalate in my opinion is the right word, what will probably happen is that Michael Saylor, if he really wants to control this market and make it go straight up, he's going to go to these different markets where he has his Bitcoin, which I believe is Fidelity and Coinbase, and say, here's an address for my crypto ledger. I got myself a ledger right here, or Trezor, or whatever storage I want to use. I'm going to take my 500,000 Bitcoin off of your exchange, and I'm going to move it over to cold storage, and I'm going to take custody. Because now what happens is Coinbase is going to go, oh, crap, we don't have this. We've been giving him just a ledger entry. Now they're going to have to go to the open market and buy it, which is going to cause a huge surge up in the price of Bitcoin, and those 500,000 are off the exchange. So I think we're going to see really volatile times ahead here when people who have large positions, like a BlackRock, like Michael Saylor, maybe even GameStop, go to their representative exchanges where they're buying this from and say, I want it. Give it to me. I'm taking possession of it myself. That's going to create the chaotic moment. So we will see if and when I'm right. But to me, that's what's going to happen here in the future. Will be someone who's a huge player like Michael Saylor says, bring all my Bitcoin to me. Dakota says classic supply and demand. Correct. But here's the difference, Dakota. Classic supply and demand implies that you don't have big changes to supply and demand. They're incremental changes. What we're getting here with crypto, and Bitcoin in particular, is supply is being fabricated for Bitcoin. So demand is accelerating significantly. Institutionally, retail, government, political, Bitcoin demand is surging. However, the supply seems to be far outweighing that demand, and that can only happen in one way, and that is that they're creating additional Bitcoin. Now, there still is only 21 million Bitcoin, but I'm willing to bet dollars to donuts, I'll bet my life savings, that if we were to calculate how much Bitcoin all the exchanges say they have, including Fidelity, including all these big institutional holders, it's way more than 21 million. It has to be. There's no way you can buy $5 billion worth of something and not move price at all. That is mathematically impossible to do. There's just no way. And anybody here who studies economics and finance, pretty sure you can validate that for me, that there's no way I could buy some $5 billion of any item and not influence price in any way, shape, or form. The only way that it would not move is if somebody offset and sold 5 billion of that item at that price at the exact same time. And that just doesn't happen. There's no wallet transactions that have shown that Bitcoin move. So it is a manipulation game going behind the scenes on Bitcoin without question. Hopefully the smart people will pull their stuff off of the exchanges. When you do that, you're creating a liquidity crunch, and that could hurt companies like Coinbase because now they're going to be on the hook for all this Bitcoin they say they have, which they probably don't. Yeah, let's see. We shall see. It's going to be a crazy one, guys. It'll be a wild ride. Anyway, let me keep moving up my list. That risk on today, the last couple of days certainly helped push gold down. And I was kind of surprised to see gold wasn't the recipient of more buying pressure here. It was actually down today 0.11%. And given the fact we had equities crush and a risk off event, I actually thought we were going to see prices move to the upside. But we did not see that on gold today, so only 0.11% slide there. The dollar index. With that, I'm going to use a graphic here, which I thought was really kind of cool. I wanted to show Benjamin Franklin on the $100 bill with a big smile on his face. Love it. This is, I think, putting the U.S. in a little bit of a tight spot here because while the dollar has certainly sold off since the beginning of the year, and I'll draw from peak to where we bottomed out at just a couple days ago, the dollar has fallen 6.33%. And again, I always emphasize this. People think, 6.33% is not that big a deal. That is the global purchasing power of your dollar. That is a massive, massive deal. Anyway, from those lows the past couple weeks here, from March 18th to where we are today, we've seen a much bigger rally up in price of that dollar index to the tune of about 1.38%. And the question is very similar to these broad market indexes. Is this that rally that is going to change the whole trajectory of this downtrend that we're seeing since the beginning of the year and start to push the dollar higher, maybe even getting above that 110 mark? All right, we're currently at 104.63. If we get above 110, that could cause some economic issues and start to hurt GDP numbers and hurt our economy because that dollar is so strong. Here's the kicker on this, and I'm kind of digressing because I got two things left to cover, which is crude oil and the dollar and the 10-year yield. But I don't know if you guys caught this. I'm trying in my mind, as I'm sure many of you are, and I'd love it when you guys share your information with me. It's always appreciated. I'm trying to figure out how the next dominoes fall. How do these chess pieces move based off of the political decisions that are being made by our president and our elected officials? The news today from the UK finance minister about their GDP and their military spending was rather interesting. So I put this up here with this kind of interesting graphic. It's the British flag kind of, beaten up. It looks like like someone had painted a shipping container and it's just got cracks in it and it's looking kind of weak. And no, it's nothing against my British friends, my friends in the England, nothing against them at all. It's just saying that I think that the actions from the U.S. are going to start to have an impact on England. Now, of course, we're talking tariffs with everybody and tariff here, tariff there, tariff there. The finance minister said that the GDP, the percentage of GDP that the UK is going to spend on its military is going to jump to 2.5%. That's increasing a good amount their military spending. Of course, we also have heard the talk track from the UK that their GDP numbers are shrinking. And the expectation that I saw was they're going to slash their GDP for this year in half of what it currently is. That's not good, right? It's not good to see economic malaise or slowdown to that extent. Now, why would they want to be spending more money on military? I'll let you guys answer that one. Unfortunately, I have the long lag time here today, but why would the UK be stepping up to a good amount their amount of spending on military? while I read some of your comments, I'll let you type those ones in there. Couldn't get around 25% auto tariffs on all cars not made in the USA just announced and confirmed. Wow, Sava. All right, well, there goes your Bentleys and your Jaguars and, Europe ones. I guess I'm all right with that. Well, Trump just announced. Yeah, I'm okay with tariff all those international cars coming in the U.S. Let's do it. UK in a bit of a mess. There you go. NATO funding. Yes. Right? So the Ukraine jobs potentially is going to slow them down. NATO. So we haven't pulled out of NATO. It's my understanding that based off of certain commitments, we couldn't do it right now if we wanted to, even if Trump signed an executive order, because it still has to have 2/3 of the Senate approval. So getting that's going to be tricky, even though it's Republican control that we pull out of NATO. I believe that 68% of, if I remember correctly, like 63 or 68% of the funding for NATO comes from the United States. So certainly in this approach to rein in spending, right? We're not even part of that European area, yet we're paying way more than the participants that live in that area. And I kind of think Trump's right. Like, well, maybe we should be more evenly distributed. But if that funding starts to decline, and of course the U.S. is trying to find ways to cut money, expenses, that might be a logical target. So I think what you're going to see more and more is European countries spending more money on defense, knowing that there is the possibility that Trump decides maybe to cut back on NATO, probably not pull out altogether, but if that were to happen, that's a massive amount of funding, and that shows a bit of weakness over there for any NATO-supported country. So I think that the news from England saying we're increasing our spending and we might have some economic crunch here, GDP slowing down because of tariffs, that might spread to many more countries throughout Europe, and I think we could see the dollar continue to surge. That was a long-winded story there, but ultimately, that military increase comes at a cost. So you're not making as much money because your GDP is weak, and you're spending more money. That's deficit. That puts them in a pretty bad position. So we shall see how this all transpires. Again, these are simply domino pieces that are not impacting our market immediately, but over time, if UK kind of digs a hole even deeper from a deficits perspective, I've got slowing growth, which means less revenue coming into my country, and I got more expenses. We all know how that turns out. The U.S. has been doing that for a long time. Deficit spending. You get to a point that you're headed towards bankruptcy and you start to cripple your economy a little bit. So what does that do? That's probably going to impact you Forex traders. So finally, the Forex trader is going to get some really big moves here. Here's the British pound US dollar, which has been on a really nice rally for this entire year. Is this that moment that we start to see that pivot? If the data is starting to come out a little bit wonky from the UK, their forecasts for GDP are starting to decline, does this start to roll over? And I'll put a line right across the bottom here, which is, we're pretty much at it right now. It's 1.286. That's the level we've been above for the past few weeks, right? We ripped above that on March 5th. We've bounced off it a couple times, and now we're coming right back down to it. I am of the opinion that this British pound is going to break that level and start to traverse lower. Now I'm going to scroll out here just a little bit so we can see the bigger picture. Really the British pound has not done anything dramatic. Well, it did back in July of 2022. It had that huge rally all the way up to 1.31. But really for the past couple years, it's oscillated, but no real clear direction right now. Just kind of choppy. If that weakness does persist for the UK, I do think you'll see this British pound start to drop and move lower as their dollar will become, or their British pound will become less valuable because their economy is just not doing as good as expected. Now, if that happens, we'll probably see more rate cuts come out for England. Right now, they're, I believe, at 4.5%. So is the US. They will probably start to cut aggressively a little bit more to stimulate their economy if that GDP number does, in fact, come out poorly. Anyway, I wanted to share that with you because normally I'm a U.S.-centric show and talking predominantly about U.S. markets. However, in that analogy I make about opening a classic watch and having all those cogs in it, this is a big cog. And the economic announcements from their Treasury or Finance Minister I thought was really interesting. It was telling, saying, okay, we're increasing military spending. And in my mind, that's probably because they're anticipating the U.S. cutting back significantly on NATO. That means they need to up their protection in the UK. And of course, with the turmoil that's going on over in Europe with Russia and other issues, going to make sense. Now, do we see Germany say the same thing next? Do we see France jump in there and say, well, we're going to increase our spending to 3% of GDP or 5% of GDP, whatever it is? I think you're going to start to see that more and more over the coming months. So that collectively should put weakness on the euro and weakness on the British pound. So what does that mean? For you euro traders, we've already seen a pretty significant sell-off here in the euro. We had that overhead supply, which actually did close above it, so I'm not going to hold a lot of emphasis on that. But now you see, selling off there from those levels. I think you're going to see the dollar continue to surge. I think you're going to see weakness show up here on cross pairs. So that's the euro. That's going to be anything to do with the U.S. dollar as a cross pair. So yeah, watch this gap happen. I didn't see. Let's see what's going on right now. S&P. Let's go 5 minutes. Well, we're just trickling lower here, but that of course is on the futures, which has a 15-minute delay. Let's go SPY. On this account, I don't have the live futures, but nothing too bad yet. We'll see how that jumps in the morning, how the gap is in the morning. All right, what else did I have for you guys for today? I did the dollar strength, talk about military increase, talk about UK struggles. I wanted to get those last two pieces up here at the top, which were going to be the 10-year yield. Now that 10-year starting to drift up higher and higher, right? We saw a nice move up today, 0.86% move up in that yield. Of course, we do know that the U.S. wants to have a lower yield all across the board, right? Take the whole yield curve and shift it down. Yeah, market is closed. Yeah, I'm aware of that one. But there's a rollover period to end here soon, and we'll see that gap. We'll see right as it flips up. Dollar blows up. It may be hard for equities to move up. Correct. And that could create that kind of, if the dollar moves up, that hurts our exporters, the big exporters. But remember, we're not really looking for, with the tariff wars, our exports probably are not going to be increasing, right? We're probably going to keep things a little bit more in-house. Less exports to Canada, less export to Mexico, less export to Europe and China. So we may not see that big of a sting. Normally, your trade is what really kind of gets hit if the dollar has big swings up or down. So I'm not exactly sure how it's all going to play out tomorrow. He said we're going to make those tariffs. Okay, great. Let's see how it impacts the automotive stuff tomorrow. We'll look at those equity plays on tomorrow after the markets open up and see where our futures markets stand. Because I can make an argument that those tariffs are going to be good for our market, and I can also make arguments they're going to be bad for the market. And who knows if they ultimately get pulled in the next few days. We have this art of the deal tactic, which we've talked about, which is you say you're going to do it, you implement it, and then you pull back right away, just to see if those countries will cave. Last on this one was crude oil. Again, this was kind of a surprise for me. Today you had a 0.94% move up in crude oil, up to 69.65. And when I see a move up like this, I'm anticipating this because supply is dropping, therefore the price is going to get higher. Well, you look at your economic calendar that we talked about today, that did in fact happen. We had a decline in supply of 3.3 million barrels versus an expectation of 1.5 positive. So this time it actually did do what it's supposed to do when you get those announcements. I've seen them actually very off. Generally, when I see a negative number on the crude oil inventories, I'm expecting crude oil to have a surge up as it did today. But I wouldn't hang my hat on that one. Sometimes it's very, very off and just kind of confuses you along the way. So for companies that produce cars here and also Japan, aka Subaru, they're just not going to import any to the U.S. anymore. Yeah, what'll happen is they're probably going to try to push to do more manufacturing in the U.S. because those will be exempt from those tariffs if they do the manufacturing in the United States. And that Trump has said that that's one of his goals. He would love for the factories in Mexico to move their factories into the U.S., create more jobs. I think we'd all agree that the labor in Mexico is probably significantly cheaper than what it is like here in the United States. So ultimately, even if those manufacturers of those parts came into the United States, the question is the cost of labor 25% less? If the cost of labor is 25% less in Mexico, then just stay there. It's going to be a wash. Because if you move your factories to the United States and set up here, and it costs you 25% more, you're still equal with the tariff plus all the construction costs for the new facility. So just stay there. So it's going to be a math number for these countries and the businesses that are going to be impacted by these tariffs. Some will come to the United States. Some will just stay where they're at based off the numbers. Products produced in the U.S. are not tariff. Correct. Right. And, Big Ab, this is an interesting one because when you look at the percentage of vehicles that are made in the United States, does that mean assembled in the United States? Or, if I get a carburetor from Rio de Janeiro, is that now going to be tariffed? If I buy an electrical panel that comes from China, but the car is built in the United States, does that electrical panel get charged? And I don't know. It sounds like from what you guys are reading, and I haven't read it yet, that it's going to be on a completed vehicle. So that certainly would make sense to me. It's built outside the U.S. The manufacturing's done outside, so tariff it. Right on. Good for him. Humanoids will lead to lower labor costs in a few years. Totally, Sandir. And we've been talking about that. At some point here in the U.S., we will get much more robotic manufacturing. I think a lot of cars are done with robotics. Tesla's factories and Rivian's are pretty much all robotics. If we get more and more of that, then that leads to more unemployment and job displacement, which is a whole nother discussion to get into. Made in the USA, but not really. Exactly. I guess they will be relying on robots to build cars in the future, but not having to worry about labor costs here in the U.S. Right. iPhones are about to be $9,000. Hey, black market, I'll sell you my iPhone. I want to go back to an old phone that doesn't. I want my house phone. I want the phone and the answering machine in my living room so I don't have to be on beck and call all the time, 24/7. For those of the older generation here, you might remember when you used to get a phone call, you'd be at the movie theaters, you found out when you got home. You got home and you looked at your answering machine and no one knew if you answered your answering machine or not, so you'd have to call them back for a day or two. Nowadays, man, people see if you even looked at the message. If you don't respond back in 5 minutes, they get all upset at you. It's like, come on, man. I don't need to be reachable by everybody. What does Dakota say? So if they're going to rely on robotics, what is their argument of bringing jobs back to the United States? It's a good argument, right? You bring your jobs back to the U.S., and certainly there will be human element. It's not like if, let's say you have a plant with 1,000 people working on it, or if a normal plant that was all human have 1,000 people at it, maybe now I have 200 or 300. I still have humans there, so there will be job creation. But I think it's about keeping the jobs in America, even though we do go robotic. I want everything to stop following, everything to stop following every move and listen to everything around. If robotics are doing the work, then where will the Social Security tax come from? Stephen, great question. I'd like to get an economist on here that might have a better understanding of this, but it's one that I grapple with quite a bit, which is if we get to this period of robotics where everything is robotic and automated around the world, particularly manufacturing, then those people that had those jobs are unemployed. Now, historically, when an innovation comes along that displaces workers, new things are created and there's new jobs created for that. I believe personally that this time is different. I think that AI is so across the board of job replacement that it's going to start to create problems for the employment situation. And I don't think this will really be that big of a deal for the next few years, but let's say if you look 10 years out, do we need to have the discussion of universal income? Because there's going to be a lot of people that aren't going to be working. There's not going to be jobs for them because some of these jobs that they would normally take have been replaced with robots, right? So let's say I worked in Detroit as a car manufacturer and I was on the assembly line for cars. Along comes a robot system for my company, faster, more efficient, and replaces me. Great, I'm unemployed. I go look for a job, and maybe I can't find anything. I now go work at McDonald's. And McDonald's now replaces me with a kiosk or an automatic burger flipper. I now am out of a job. Where am I going to go? At some point, all these tasks are going to disappear. That's a much more interesting conversation, I think, if we have someone who is an economist and kind of talk about historical trends of innovation. I'll see what I can do to get some on there. But I think the future this time is very interesting. Very interesting. If you're in your 20s, in your teens, man, you got a rough road ahead of you, which is why I think you should be a trader. I love the comment the other day about teaching your 10-year-old to do the wheel strategy on Ford, right? Go with something that doesn't move very fast. You got Ford here. All right, it's a $10 stock. You're not going to get smoked that badly on this one, but sell puts, generate income, understand how to make money consistently out of the markets, and then once you're in Ford, which doesn't pay you much premium at all, you upgrade to something a little bit faster, a little bit more movement, and then to me as a trader, I hate to sound so ignorant or not ignorant, but more so arrogant about it, but I don't really care. If job displacement happens and there's mass disruption, it won't impact me directly from monetary income purposes. It might impact me from friends and family needing support, but that's something we'll have to deal with down the road. McDonald's needs to clean their toilets. Hey, those are robot for that, Margaret, without a doubt. Ford pays a decent dividend for the price of the stock. Possibly. I don't look at dividends at all. It's not so much. 30 cents for a 10 to yeah, that's pretty good. Right? If you were, 30 cents, yeah, that's a good dividend. I'll give you that. 30 cents dividend for a $10 security. That's pretty good. But the point I was making was this individual was teaching his son how to do options and use a wheel strategy to generate an income stream. And man, I wish my dad showed me this at 10. It's kind of funny. So my story is my dad lived up on a hill in the middle of nowhere. My parents were divorced, so every other weekend I would go see my dad. And he was a realtor, so he was just never there. So I'm on a 3-acre parcel up in the mountains, and I would go scorpion hunting and rattlesnake hunting and start fires and do all kinds of stupid stuff that kids do. And I was rummaging through his stuff, and I found this. It was an S&P stock guide. And it was like a little white booklet, probably, 5 inches tall, 10 inches wide, and maybe 3/4 of an inch thick. And it was like every page was a stock in the S&P 500 and had a profile, what they did, shares, and all the fundamental data that I knew nothing about. And he explained it to me very briefly. And I remember I bought some companies, started with a letter R. It's all I remember. I was 9. Okay, give me a break. And that kind of sparked my interest in it. But he didn't really teach me anything about trading. My dad didn't know much about trading. He just had a little investment account, I guess. But yeah, showing your kids the value of money, how to trade, how money moves these markets, businesses, all that stuff. I think it's just such a great thing to teach the younger generation today. It's funny, I mentioned the other day that I think that the government should make it mandatory that people take a class on personal finance. And it was really kind of ironic, the comments I got. A lot of people emailed me like, oh, you socialist, how dare you force people to do something. Like, I think this is for the greater good. But you're right. You should choose what you want to do, but at least the government should offer it for free to anybody who would like to take it. How about that? So we don't go down that socialist route. All right. Trade Rivian premium's better, totally, Todd, but also the volatility on Rivian is way higher. Now, Rivian's been a great one. That volatility is very high. $12 stock. Man, I should have sold those 10s a couple weeks ago. I was looking at it and didn't do it. Typically with Rivian, I like to do the monthlies. Give me a little bit more premium, but okay, let me go to your economic calendar, see what we got cooking. So obviously we talked about the couple things today, which are the durable goods orders and the crude oil inventories. If you look at, and there was Trump spoke today, but really I don't think anything was out of the ordinary from the presentation from him. Now, our GDP numbers are coming out mañana, and right now expect to say 2.3%. That's quarter over quarter. So that does not necessarily mean your annualized rate, but that'll be quarter over quarter. So we'll have to keep our eyes on the GDP numbers and see how that goes. This is the final, and then all of a sudden we will flip and go to the advanced and preliminary numbers in next month. So all in all, that is your big news for tomorrow will be that final GDP numbers. You also have goods trade balance, which will give us some idea of what's going on internationally. You also have pending home sales. You have natural gas storage. So there is some fun stuff there on the docket for mañana. And as far as earnings go, look, GameStop hit today, or yesterday, excuse me. Today you had a couple no names. You had Dollar Tree and Paychex and Cintas. But tomorrow, does it get any better? We do. There are a couple big names. You've got Lululemon. You've got Cinex, which is TD Cinex Corp. And that's pretty much it from the big names here in the U.S. So all in all, that is your economic calendar for mañana and your earnings. So hopefully there's something in there that moves your market. As far as where I think we're going to go, I don't know. Just the way that we saw that panic sell today, my gut would tell me we're going to have more downside movement. But remember, yesterday I was thinking we'd have some follow through to the upside and have bullish movement. So you just never know with these markets which way we're going to go. So be careful out there. I did ask. I got almost no feedback. Any designers? Anything you guys want to see on this show changed? Because I will be doing an upgrade to all of the visuals here. Layouts, colors, looks and feel. If there's things that you guys would like to discuss, let me know. Email me at tradermerlin@gmail.com and I will talk with my graphic designer because I'm probably going to spend some good money and have a whole new set design done. I'm actually thinking about removing the green screen and this static wall here and putting or just going back to the bookcase. I have a really nice bookcase downstairs. I thought about moving the whole studio downstairs, but who knows? I got too many choices going on here. But you guys let me know if there's something that you'd like to see changed, modified, implemented. Would love to get that input there. So the popcorn trade, you want that one back. Good news is the graphic works this time. So I do have the popcorn trade of the day. So I will keep that graphic there. I love this one. It's always been one of my favorites, but there we go. Put up fish posters in the background. Right now I have a fish wall. So there's one wall in my house that has now been the designated fish poster part. Yeah, if Howard Stern might give me some tips, Howard Stern doesn't talk to me. We're not that good. Let's see. Let's go to some of the listener questions here before I wrap up. At that time, trading wasn't a thing. Okay, in the 1900s, 40% of the U.S. workforce was agriculture. Today, it's 1%. Technology provides alternative opportunities for employment. Okay. What year did stock options become available to trade for retail? That I don't know. I agree. Basic math should be, absolutely should be taught. So here's, they don't teach writing anymore, and what's the point of calculus to a kid that hates math? Absolutely. But you should know how to balance a checkbook. You should understand that if I spend this money right now, I could have earned X rate of return in 3 months, 6 months, a year, 5 years, 10 years, right? What is the value of a dollar today, right? The bird in the hand analogy. And when I spend it on something, what am I getting for it? Is that something of value that warrants it, right? I was at an overland convention here in Southern California at the fairgrounds by my house. And the overland is these crazy camping rigs, right? With just tents and just awesomeness. I mean, it was like stuff out of Mad Max. And so, you know what? Would I like to buy a fully loaded, jacked up Toyota Tundra 4x4 double cab with an over-the-head camper shell, pop-up tents, and all these crazy off-road gear and spend $350,000 on it? I would like to, but I'm not, right? I'd rather have my $40,000 fully loaded Toyota Tacoma 4x4 double cab, which is minimal, bare bones, has everything I need for it. I don't need that frivolous spending. So bang for your buck, right? What are you getting for it, and is it worth it? I had a conversation with some friends yesterday about Peloton. We were kind of joking about it because I think I may have told you, I had a coworker who was a huge Peloton fanatic in 2020. When in 2020, he was like, I got a Peloton. It's the most amazing thing. It's great. I love it. I use it all the time. I go, man, that thing's going to turn into a coat hanger in your garage in a couple years. And that was back here in 2020 when Peloton was up at $160 a share. And I said, short it, short it, short it. Here we are. We're at $695 today, right? Was that a good value for your money to buy an exercise bike that you use for maybe 6 months and now it's just sitting in your garage? $1,500 for the bike and now it's, what, $100 a month that you're paying for the service and you don't use it? Right? We always need to think about the value and bang for the buck of anything that we buy. Anyway, I'm going off on a rant. If you can change your background, well, Gio, email me at tradermerlin@gmail.com and give me ideas of what you would like to see. You want green screen? You want it more like fashionable? I could change it every day and make it a sky setting. I could do all kinds of different stuff. Teach the difference between an asset and a liability. Yeah, absolutely, Steven. Bring back the donkey of the day. Okay, I'll bring back the donkey of the day. I also want to do, I think I'm going to do one where I have this chart of the week, which I like, but I think I'm going to have to do a chart of the day because every now and again I find something that's just such a crazy looking chart that I wanted to share that with people. So I might do a chart of the day. Transforming your body is unrealistic. Is it an unrealistic expectation, Margaret? Transforming your body? I think if you work out and you diet and you exercise, I think transforming your body is a very realistic expectation. But just like trading, transforming your physique or your appearance takes effort, time, and consistency. Just like trading, right? You have to have a plan in place on how you're going to do it. You got your workout plans. You got the calendar days, how you go to the gym and what you work out, and then you have your diet plan. Look, achieving your weight goals, transformation, absolutely doable, 100%. What is Carvana doing? There's your week. I had a wild ride, man. I mean, that was one of the crazy. It's funny because when I mentioned one of the craziest charts you've ever seen, I think that was literally like February 18th, and it's just been taken since then. Wild ride, big bounces here, down 7.57% today, but it's still not one of those ones I'd want to buy. I just don't see the model being that amazing to warrant such a lofty price. Are they making any money? 75 cents per share. They had blowout earnings, 64. So their earnings are definitely growing, and maybe that it's already priced in. But for me, not it. Stock of the week. All right. Make a gym background. There you go. Nice, John. He just lost 30 pounds a few years back. Still off. Good for you, man. That's the hard part, is keeping it off. All right. Well, again, if you guys have stuff you want me to, any ideas, really, think of it as just like a sounding board. Any ideas you have, just email me, tradermerlin@gmail.com. Let me know if there's something, maybe a segment you want to have included, a visual you want changed, a color scheme, whatever. Again, I'm sitting down with a graphic designer on Friday to have it all redone. And who knows? I don't know how big the changes will be, but we shall see. So anyway, thank you guys so much. Hope you have a fantastic remainder of your day. Email me again with any changes or show topics you want to talk about. I will see you mañana.